All right, buckle up because we are about to take a dive into the housing market jungle. Spring is knocking on the door, and the headlines are kind of either boom or bust or baby boomers are selling everything. It's really enough to make an already stressful decision even more confusing. HousingWire recently put up a video featuring their lead analyst Logan Mohtashami in an attempt to answer the question, will spring housing demand pick up with mortgage rates still this high? A link to their video will be included in the description, but I'm going to go ahead and break it down for you just a little bit, hit some of the key points, and then that way you can take a look at it and see what you think. If we haven't met, my name is Nathannecochea. I'm a realtor here in Orange County, California. Thank you so much for joining me. Now let's see what Mr. Mohtashami has to say.
I would say right now, when you look at everything, everything looks fine and normal. It's just the growth isn't really like spectacular. But of course, with me, the tracker article, purchase application data is everything. We want to look 30 to 90 days out. And since mortgage rates fell, excluding the holiday data, which if you're anything of a housing person, you don't count the last few weeks of the year and you don't count the first week of January. But you take all that, we have 8 weeks of positive purchase application data. New listings data is growing year over year. Nothing spectacular, but still growing. Active inventory rose a little bit in the last week. So far, so good.
All right. So like you said, so far, so good. The data for the spring housing market is a little bit mixed. It's edging towards the more positive side. It's just not to a degree that we can say yay boom. So even though the purchase application data is positive, it is still lower than what normally we would see. The new listings data is slowly increasing, growing year over year, but nothing spectacular. Active inventory, basically the same thing. So really, overall, what we're seeing is that the market is stable for right now. I think is a hugely positive sign. All right, so right now, as of today, mortgage rates are anywhere from mid sixes to 7%. That's kind of where we're trending right now. That's still a little bit high historically. It is suppressing overt demand a little bit still, but it's definitely not as bad as it could be. I mean, if we were up over 7 again, I wouldn't have much of a positive outlook. And when we look at the purchase application data and everything else, we are seeing that demand is still there and is starting to step out of the shadows a little bit. And with that, you're seeing that potential home buyers are getting more accustomed to rates being where they're at. Obviously, everybody would like them to be lower, but people seem to be dealing with the situation or the hand that we're dealt right now in a fairly optimistic way. Some of the key factors that they talk about that we need to keep an eye on are obviously mortgage rates, the job market, and just the overall economy. If mortgage rates start to push back up, we're going to see demand probably react fairly aggressively in the negative. And that goes the same with the job markets or the overall economy. If we start slipping into recession, then the impact on the housing market is going to be bad. All right, and in here, Mohtashami does point out the fact that November 9th of 2022 was really the turning point in the housing market. That's when the 10-year peaked at 4.25%, mortgage rates jumped over 7%, and then that definitely caused a very significant slowdown in the housing market. The other thing that I think is very interesting about it is that he really emphasizes the importance of, forward-looking data, the purchase application numbers, things like that. Give us an idea because those things come to fruition 60 to 90 days later. That's giving us data now of what to expect. And he does say that because of some of the positive signs that he's seeing in the housing market, it does look like we are trending in a positive way. If we go back a little bit just to some of the key factors that I think he's saying that we really need to track, it's going to be purchase application data, because it's a little bit of an early warning sign or an early indicator of what we're going to be seeing coming to the market. And he does caution that even though we've had about 8 weeks of positive data in that category, we should still be cautiously optimistic, because once we hit 12 to 14 weeks of that positive trend, it'll be a more reliable indicator of what we're going to see in the spring market. When it comes to the new listing data, he does say that a steady increase is good and much needed, actually, but that if we see a sudden push or sudden increase in new listings, that could be a sign of distressed sellers, and that would potentially push prices down. And he talks about the inventory levels and about how low inventory levels can offer some protection to home prices by keeping them elevated, but it also does limit the number of sales. If inventory levels rise at a moderate pace, it will be a benefit to the market. And then obviously we're going to keep an eye on the 10-year treasury and on mortgage rates. Those are going to have the biggest impact on housing demand, with affordability already being, well, where it's at. I don't see the market being able to support much of a degradation in home affordability. So we're going to keep an eye on the Fed meeting. The more signs that we have of overall economic strength or stability, those are the things that are going to benefit the housing market. The strong economy, low unemployment, those things help boost the housing market. But if we get some more signs that the economy is weakening, that's definitely going to push us in the wrong direction. And then one of the topics that he touches upon, they're very critical of kind of the trashy YouTube. I don't mean trashy creators I don't mean anything personal by that, just the style of content that they're producing. If you're on YouTube ever, and the algorithm has even the slightest indication that you have any interest in the housing market or real estate, I'm sure you've been fed some of these videos where everything starts with crash, crumbling, collapse, liquidation, the market is toast. It's the doom loop. You're probably being fed a lot of that. Then there's the opposite of those, where it's always sunshine and daisies. The issue with either is that the information that they're providing is generally pretty inaccurate and misleading if you're not giving context to the data, or you're not explaining how the data was attained or what factors are included in the data. It can be very misleading. That's why it's always important to find multiple data sources and actually do some data analysis rather than just speculate. One of the other problems he addresses is that there's a lack of historical context, and you can generally see those things when they're using week over week data to come to a conclusion of something positive or negative, something either way. You have to take into account the cyclical kind of nature of real estate and go back to generally a time before 2020. And then there's the other issue of just oversimplifying the information. For instance, there's one video I can think of off the top of my head where the creator is upset about a Redfin demand metric chart that was missing from one of the reports. He alludes to the fact that this was done in a very shady manner, but the reality is that the way that Redfin comes to their demand metric is essentially it's very specifically as reported by number of home tour requests and requests for other real estate services solely from Redfin agents. So that doesn't really have the context to determine housing demand, but it's also an oversimplification of something, of a metric that's dependent and reliant upon several factors. And then obviously they have a focus on sensationalism. They're going to prioritize headlines and clickbait titles that feed into the narrative that they're pushing. If you go to a person's YouTube channel, and every video for the last 5 years has been talking about the collapse of the housing market, or don't buy a house, or don't do this, or these people are evil, I don't think that they're utilizing objective data. All right, so there's a little bit of a summary of Housing Wire's recent video. I do personally get a lot out of Mr. Motoshami's insights. I think that he is very data driven, and I think he understands how to utilize context. And quite honestly, I think he's fairly unbiased when it comes to the information. He seems to make his analysis based on what's in front of him rather than speculation. And then the rest are just my thoughts. I would love to hear yours. What are your expectations for the spring market? Do you think that we're heading for boom or bust, or do you think we're going to be heading into a time of tranquility and stability? Anyway, if you like the video, please like the video. If you'd like to subscribe, please subscribe. If you would like to talk to me personally, my contact information is in the description below. Thank you so much for watching. We'll see you next time.